Now, over to smart charts. Abigail, you're looking at some interesting charts today?
You're right about that, Joe. Always looking at interesting charts. Today, we're really focusing in on the S&P 500, given the volatile start for the fourth quarter. Here with me, Walter Zimmermann of ICAP Technical Analysis. And Walter, I'm not sure if you know this, but right now, the fourth quarter is off to the worst start of any quarter since 2009. Now, 2 days a trend does not make, but nonetheless, it's somewhat worrisome. And you've had a little bit of a bearish view for your last few segments, and you have sent us today a tremendous daily chart on the S&P 500. Let's take a look at it because its simplicity and the messaging here is really pretty strong.
Yeah, this is actually pretty awful. First of all, it's a bearish rising wedge, and this is the entire year. This is from December 2018, 2347 up to 3028, and technically this should have been an A, B, C, D, one marginally higher high. You never got that marginally higher high. Where is it? It's MIA. And not only do you not have a marginally higher high, but there's a gap here and there's a gap here. So all of this price action is a big gap island reversal top. And you've gapped down through the bearish rising wedge support line. It could hardly be any worse.
Yeah, it is pretty bearish. And I actually mistakenly marked it as a broadening formation, which we'll be taking a look at in a minute. But you're right, bearish rising wedge. And typically when these patterns are successful to the downside, they act very quickly. And the true target could be all the way to the lows there. Now, could you see that happening? And what sort of timing are you looking at?
Well, actually, what I'm looking for that low to be broken by Q1. I think we're going to see something around 2150, maybe even 2100 in the worst case.
So let's back that up because we do have a chart. And what's so interesting about this weekly chart, so this is a chart that we here at Bloomberg made probably back in May or June talking about it. And then another one of our charting guests, John Kalovis of Macro Risk Advisors, he's presented something similar. You have a similar chart. So we're all looking at the same big bearish pattern here. Talk to us about why you think last December's low is going to be broken.
Okay, well, and if you break down the component pieces, it's a textbook perfect expanding triangle. Starting here, your A leg down, your B leg up, then your C leg down was 1.618 of your A leg down, and then your D leg up from here to here was 1.618 of the leg up from here to here. Now, this is all astonishing precision. This is not coincidence. And then here you can see a little better the gap island reversal top, the acceleration lower. So if you work out the similar patterns, what you're targeting is something between 2150, 2100. Now, if that holds, this whole entire thing could still be one massive bull market correction. But little solace to anybody who's long up here if this bull market correction is not going to end until the 2150 area.
We'll certainly take that as it comes on because this is the pattern that broke in 2007 into 2008 and also 2000. I know technical analysts don't like to talk about the what, but you're talking so technically here. Let's talk a little bit about the what, the uncertainty. This really tells us that neither the buyers nor the sellers have a better idea, but because it's getting increasingly wild, typically it goes to the sellers. Can you talk to us about why?
Well, it's because in general, people are long, and they have been bullish through this entire pattern. And every time it takes a big hit and recovers, it makes them even bolder to buy all the way up. So you have a market jammed with speculative length, expecting nothing less than a continuing advance, and then this market gets hit with a trade war. And what the bulls have been thinking is, oh, we'll be saved by a rate cut. Well, if you look at history, a trade war versus an interest rate cut, that's kind of like a Godzilla versus Bambi
yeah, and it seems also that there's probably a lot of smart sellers up here at the top waiting to take advantage of maybe some of those perhaps too optimistic buyers, those longs all the way through that pattern.